that's important. None of the work program we talked about in this session are commitments other than this well. And this well, we only have 20% interest. Marathon is still carrying us for part of our interest here. So I think this is the only real obligation we've got this year. Everything else is discretion. We can take our foot off the gas and coast a little if we have to, if oil prices stay down longer than we expect. Again, an interesting looking prospect. The seismic isn't quite as good here. Again, even for you budding geophysicists, you can see just the reflectors aren't as continuous. But we do have some nice outcrops of source rocks. Those are the same Miocene source rocks that produce oil in the Lokichar Basin. So it does look interesting to us, and I think we may drill this well, if not second half of this year, certainly first half of next year. The Rift Basin area is the only one we're shooting seismic on. Again, Marathon is our partner here. They're paying for the cost of the first 400 kilometers of seismic. If we see something that's interesting, we've got the ability to put that up to 800 kilometers, but we'll be paying half of that. So once again, I think we'll have to see something fairly interesting before we commit to shooting seismic there. Again, the reason we like this area, I think we've talked about it before, nice thick shales on here, oil seeps on the lake. This is the place where the farmer came to us and said he was drilling water wells and petroleum kept coming up out of his water wells, and he said, we need help. And I said, we can help you with that. So show us exactly where that is. So we're looking to drill some water wells in the neighborhood to see if we can help the farmer out. So I like this slide because it kind of gives you a summary. This is what we're planning to do this year. So, broken down by quarter. So we've already drilled these two wells. These two wells, we're almost finished with this well. So sometime before the end of the month, we're going to put a press release out for this well and these three wells. We've already committed to the Gamia 7 well. We've already committed to the Agales Deep. We haven't done a firm commitment to Samaki or any of the basin opening wells. We have committed to Amasing 4, and we're building that location. But every one of these stars you see that's kind of shaded and hatched, those are optional. So the money we've got in the bank pretty much takes us through the first quarter and into the second quarter, and most of the stuff that you would call as firm. Anything that we want to do above and beyond that, we have to think about raising money in the market, which in the current market, I'm very reticent to do. I think at some point it makes more sense to just slow down and do what we can with the existing funds primarily. We do have some things that don't cost much money, like the pipeline. The pipeline is just getting in and working with the government and convincing them that on selecting a route and a commercial structure. So I think that's something we want to see done at least by the beginning of the third quarter. The extended well tests, we've pretty much paid for most of that already. We've drilled the wells, we've bought the equipment, so it's just operating costs to keep those operating. And they're good value add because that will make us understand the reservoir. Special core analysis, very small amount of money in the scheme of things, a couple $1 million, and we'll be able to get all the analysis we need to firm up that reservoir. And then we're pretty well finishing now the upstream front-end pre-feed on both the upstream and the pipeline. And those are things that we need to do because those are things that are going to go into the field development plan. So what is the plan for Africa Oil? It hasn't changed. We still think the best thing for our shareholders and for our company is to bring in an industry partner. The other thing that we think possibly is going to change by the same time period is the capital gains tax. So I think we're seeing a lot of momentum to change that. The way they would change that is by putting it into the 2015 finance bill. So generally that bill goes to Parliament in June, and as like this year, it was passed in September. So you can see there's a lot of things coming together right about the third quarter. Pipeline, possible capital gains, the results of the EWTs, the results of the core analysis, and leading up to a point where we think we're in a position to put a field development plan in place. So this is the point where we think we've got this mature enough to really start showing to the big guys and taking enough risk off where we think they would be realistically making an offer for us. Of course, the thing that's not shown on here is oil price. Oil price, we hope during this time also hits that third quarter rise again. If it doesn't, we probably need to delay our process. industry is one of the worst in the world at buying when things are high and selling when things are low. And I think one of the things that differentiates the Lundins is they generally buy when things are low and sell when things are high. So we were quite happy to sell Redback at the top of the market. We sold Tanganyika at the top of the market. Actually, when we closed Tanganyika, it was back to the bottom of the market. Thank God we still closed it. But we don't see selling our company either partially through a farm out or totally until the market starts recovering. And I do think there's going to be, having been through this 4 times now, there will be a wave of acquisitions once people they think they've got to the bottom. There's a lot of distressed companies out there. If this oil price stays, the second quarter and the third quarter are going to see massive bankruptcies here in our sector. And I think those of us that can stay through. If you've noticed, the Lundins on the mining side have been aggressive lately. They just bought a gold mine in Ecuador, again bottom of the market. They've just bought a copper gold mine in Chile, what we thought was the bottom of the market. Today we saw a little bit lower bottom of the market, but I think the strategy is good. We're buying things. This is the time to buy. For those of you who have been holding Horn Petroleum for some time, I think we're gearing that up to be a vehicle that's going to take advantage of this market and start looking at some of the deals we've been looking at for the last year or two that are extremely overpriced. I think are going to start coming down to reasonable prices now. And some of the host governments who have been a little proud of their assets and offering very tough terms, if we're the only guy knocking on their door, like we were with Africa Oil. We basically built Africa Oil in 2008, 2009, during the last time this happened. So this is if you've got money and you're aggressive, this is like Christmas. This is the time to go shopping. If you don't have money and you got huge debt, you got a problem. And unfortunately, we like to capitalize on people who have some of those problems because that's when you get your real party. So anyway, I know it's been a very rough year for everybody. I think there's not a company in the resource industry who would not echo this. There's been a huge disconnect of true company value and share price. There's companies that are trading at 20% discount to cash. There's companies that are trading at 30% of their NAV. So we're not alone. Everybody is suffering, and share price disconnection has happened because the market's in panic. The market doesn't know where the bottom is. They don't know what oil prices can go down to. But the saving grace for us is we've got a great project, and we will be paid for that project if we stay in long enough, and we can do that. We have the ability to stand together, whereas a lot of people don't. So 2015 is all about survival. We will still be standing at the end of the year, and the goal for us is to keep the project moving as much as possible while diluting our shareholders as little as possible. And that's the decisions we're making now in the first quarter is what do we really want to spend and how much is it going to cost us in terms of dilution. During this time, we'll also be talking with people about mergers. We'll be talking about people with farm-ins. There's still a couple of companies that we're discussing possible farm-ins. And at the end of the day, it's all about dilution. What gets us to our goal with the least amount of dilution. So again, one of my favorite photos. This actually isn't George Foreman, Sonny Liston, but we shall overcome. And I think the strong will survive, and the weak won't in this market. And I think I still consider us one of the strong. So I'll let you read through the cautionary statements and the prospective contingent resources at your leisure. And I think we have time for some questions.